So we're going to talk about year 2025. Is it going to be bull run? Is it going to be bear run? Is there going to be financial crisis? Is it something that we should be worried about? This is going to be a long video, but if you know me, I don't make long videos. But the reason this is going to be long because I'm going to discuss about everything, and it is important, and not because of the views that I care about the views or the ads money. I always try to keep them short. Anyway, it is important because there are some indicators that have gone red, or you can say the indicators are triggered. I'm going to start off with easy information so you could understand, and then I'm going to get into a bit of technical information. Unfortunately, this is my field of education, so I know what I'm talking about. And those who are in the market and they are educated on finance or economics, I don't respect people from economics, but or economics, they would understand what we are talking about. Anyway, let's get started. The reason I'm expecting financial crisis or financial distress, whatever language you like, for the year of 2025 is because there has been some indicators that are indicating that we are heading towards that. I'll try to avoid using strong words because I'm not a god. I don't know everything 100%. But if you have watched my video on 5th of August when I called the bottom for 2024, or if you know me, you would know that I don't like to come out and make predictions and make people hate me because when I was talking about bottom in August, on August 5th, everyone was talking about Bitcoin going towards 40,000 and 30,000. That was the time I was talking about going up. And it was 3 a.m., which basically meant that I really cared about what I share here. Same as the case scenario here. Again, it's 10 p.m. almost. I'm sharing this because I think that we are in a green market. It is January. It is start of 2025. This is the right time to talk about bad stuff and prepare for it rather than get stuck in it. And then I come back and I tell you that, hey, by the way, we are in financial crisis and you're already fucked up because you're sitting in it. By that time, you'd already know. Anyway, it's like you're stuck in a puddle and then someone tells you, hey, there is a puddle. So we saw 3 rate cuts from Fed. By the way, when I'm going to touch on the economy, I'm going to touch only the economy of US because that is the economy that fucks up the overall world as well, and that is the economy that matters. I'm not going to touch on the other economies because they are irrelevant when it comes to financial crisis. Plus, you're dealing in crypto. If USA is bad, the rest of the market is bad anyway. We had 3 rate cuts from Fed, and that started in September. So the 3 rate cuts, they were 50 points. I'm going to scroll and try to find it, but I do remember them. It first was 50 points. Then the second 2 rate cuts, they were in November and December. They both were 25 points. And both of all 3 rate cuts, they were not able to bring down the inflation. And what do I mean by that is that when the rate cuts happened, so the total rate cut that happened in 2024 was 100 points. And just a second, the inflation at that time, it didn't move at all. When I say move at all, it actually increased. So I think we went from 2.4% inflation to 2.7 in November. I'm going to find that very soon. It's just that I have to scroll. Yeah. So in September, the inflation was 2.44%, October 2.6, November 2.75, and December is going to come out on 15th of January. If you watch my Bitcoin video, it's one of the reasons why I told you that you will have events on 1st of Jan, 11th, 15th, and 20th. So 15th is the CPI information. It's the inflation rate. They will tell you that what is the inflation for the month of December. Now, this is concerning because we are talking about stagflation. Now, I was looking at this crisis in a different way, thanks to people like Robert Kiyosaki, the writer of Good Dad, Bad Dad. he was talking about a bit misleading information. I mean, he had a famous book and he was lucky with home buying and stuff in 2008. It's like that guy from Big Bang Theory who went to space one time and then he came back and he kept on talking about it. He's more or less like that. He keeps on talking about that one good thing that has happened to him in his life, and that was that book. Anyway, because in 2023 we had banks collapsing. So we had Silicon Valley Bank and we had some other banks, and he was talking about 2008 crisis. He had a deja vu moment, and that misled me as well. And of course, there were other people that were talking about financial crisis that were related to either the dot-com bubble or 2008. They were not able to look at financial crisis from 1970, which were related to stagflation. Now, what is stagflation? Stagflation means that there is inflation and it is stagnant, which means that the policymakers, okay, or those who apply the monetary policies, they are doing rate cuts and they are doing everything else to make the economy work, but the inflation is not budging. Inflation doesn't care. And that is exactly what happened, is that we had 3 rate cuts, total 100 points, but the inflation with every rate cut continued to go up. Now, of course, after this last rate cut, we are yet to see the inflation rate on 15th of January. So this video is a bit premature, but I think the timing is right. I have to talk about it. Until and unless the CPI data on 15th of January that comes out and it shows that the inflation has gone down to 2%, even if it goes from 2.75 to 2.6, I wouldn't care, because that's not much of a drop. I would still consider it to be stagnant. And I think inflation being stagnant for 4 consecutive months after 3 rate cuts, that is a bit alarming. And I think it's one of the reasons that institutions and smarter investors like Uncle Warren Buffett, they have started selling. Of course, I think he started seeing it way early. He's smarter and maybe he has access to way smart people. That's why I think he has sold around $102 billion in total from the bank shares, the Apple shares, and some other shares he had. He started selling it. I saw Jeff Bezos selling around 8 billion, Mark Zuckerberg selling around 2 billion. The overall sell-off from they're called insider selling, individual sellings, and then organizations like Warren Buffett's, what's that thing called? My God, I'll remember the name. Anyway, Berkshire, like Berkshire, they are selling. And then you have institutions, they are selling. Now you have 4 types of institutions, but this is not an education video. But just remember that you have people like BlackRock, Vanguard, then you have people who are managing retirement funds, insurances, all these people. They are the supreme of the supreme. They are considered to be the smartest people because they have hired hundreds of people better than me, more educated, and they have hundreds of them. So these people, they understand what they're doing, and this brings me to the point that they are selling, and there is a little bit concerning indicator that is my own, which is basically, if you assume there is a financial crisis next year, then the year before you should have a big sell-off. So I came up with a percentage method with it. Of course, if this video gets some views, some famous influencers, they will copy this. They'll start using it. But anyway, I mean, they need to do something to earn bread and butter. So you take the sell-off value, you take the total market cap of the stock market, and then you get the percentage. So I have done that already. I'm going to just scroll and reach to that in just a second. So in terms of years, it's very, very, very fun. I'll explain that, and I'm sure you will enjoy it. So the year before financial crisis of dot-com bubble. That was year 2000. So the year before the crisis was 1999. The financial crisis of 2008, the real estate collapse. So the year before that is 2007. And if year 2025 is the financial crisis year, then 2024 would be the year before it. So let's talk about the sell-off. How much did the total sell-off was? When we say sell-off, it is combination of three things. One, insider sell-offs, individual selling like Elon Musk, Mark Zuckerberg, Jeff Bezos, everyone that is rich enough to sell off billions, they are selling. Second, organizations like Berkshire from Warren Buffett. Third, institutions. So these numbers are amalgamation of these people combined, and you have to work really hard on this, so you can do your own math. I'm not going to get into details of it. We are already on 11 minutes. I'll try to conclude this in 20 minutes or 25 anyway. So in year 1999, the sell-off value was $90 billion. And then in 2000, there was a financial crisis. The sell-off value in 2007 was $120 billion. And in 2008, we had financial crisis. And year 2024, we had a sell-off value of $350 billion, which is a bit scary because it is bigger than 1999 and 2007 sell-off combined, because that was what, 120 plus 90, that is 210, and we have seen a sell-off of $350 billion. This can be a bit misleading because you are looking at absolute numbers and you're not doing it a comparative analysis. So we are smarter than that. What we will do is that we will compare it to the market cap of that time. What it means is that at that time, if one banana was for $1 and now it is for $4, yes, it would look like that, okay, it is expensive now in comparison to 1999, but you need to understand, you need to adjust it for the inflation, which means that at that time, the stock value, the stock price was not as inflated as it is now. Why? Because now we have trillion-dollar companies. It's not that they are so amazing that they are sitting at trillion. It's just that the overall world is fucked up. That's why you have $1 trillion companies, because you have a fucking home for $1 million, that is 2-bedroom home. I mean, I live in Toronto. In my neighborhood, every home is 1.2, 1.4. It's 2-bedroom homes. So it makes absolute no sense. Why would someone pay $1 million for it? But anyway, I'm just trying to tell you that why the things are so expensive. So at that time, the market cap of the total stock exchange of US, all companies combined, if you don't understand what is market cap, if you combine all the US companies, their total value was, in 1999, it was $14.78 trillion. In 2007, it was $19.8 trillion. But in 2024, the value is $55.2 trillion. So you can see that at that time, it was 14.78 in 1999. Now it is $55.2 trillion. So there is a massive growth, massive gap, which means that the sell-off should be up there. You take the total market cap, divide it, and then you get a percentage, and then you compare the percentages, and then it makes sense. But the fun part is that it is kind of matching it. If people had used this in 2007, if I was not studying at that time, I was grown up, this was a beautiful indicator. You could have picked it up. You could have picked up 2008 financial crisis. But anyway, so if you take 90 billion, which is the sell-off of smart money. By the way, these people are called smart money. Why? Because they're extremely rich, they're well connected, and they have access to so much funds, which means pretty much they control a lot of things, and they get to know what they're doing. So this is called exit of smart money. So the exit of smart money in 1999 was $90 billion. At that time, the market cap was 14.78 trillion. So you take 90 billion divided by 14.78, you get a 0.61% sell-off. Now the fun part, in 2007, you had a sell-off $120 billion. Market cap was 19.8 trillion. You divide it by that, you get a 0.61%, which is an exact match. So that's why you would have picked it up if you were there. Or if you use time machine, you can go back and do it, but you would already know. Anyway, so you take $350 billion of 2024 and you divide it by $55.2 trillion market cap and you get 0.63. It's a little higher, but that's not good. It's not lower, it is higher. So when you look at it, you are seeing a very consistent indication that the smart money is exiting the market, and this is alarming because it matches. Unfortunately, you have coincidences once. You don't have coincidences every time. It can't be a coincidence that every year before financial crisis you have this data and then it matches. So all these past 24 years, 25 years, because I'm looking at it from 1999, the data matches, the behavior matches, and I'm going to explain other stuff. It is just beautiful. It's artistic if you look at it. It almost seems like planned, but it is not planned. It's just that it is pre-planning from the smart money. That's how they take decisions. Anyway, so this is another indicator apart from stagflation that I'm seeing inflation is not decreasing and is going up, and there are rate cuts happening, which means rate cuts are not having an impact. This is another indicator that smart money is leaving the market while you don't even realize it. $350 billion are sold, which is 0.63% of the market cap of $55.2 trillion. So if we had looked at it in absolute numbers, of course, it would have freaked the shit out of you. You would have looked at 90 billion in 1999, 120 billion sell-off in 2007, and just by looking at $350 billion, you would have freaked out. That you would have said, this is so massive in comparison to this year is guaranteed 2025 is financial crisis because the number is so big. But like I said, we do comparative analysis, we adjust it accordingly. So by looking at the market cap in current terms fixes the overall issue of inflation. So we are doing current sell-off value with the current market cap instead of looking at it in just isolation and then assuming wrong things. So 0.61, 0.61, and then now 0.63. It's an exact match, and that is a very solid indicator that 2025 is the year when you should worry a little. Now, there is more to it, and then of course in the end I'll tell you what do I expect. Just a second, okay? So when we look at it, 2020, so there is a pattern. There is a beautiful pattern on how this thing is done. So let's say 2025 is financial crisis. What would you do? You would have 4 years before that, right? So you will take it 2020, 2021, 2022, 2023, 2024, sorry, 5 years. So the first 2 years of 2020 and 2021, the institutions, they kept on buying. So the net outcome of the market in that year, there were more buying and less selling. So it was more green in that term. So there was more buying intention. It doesn't matter if it was green on the graph or not, they were buying more and selling less. But if you look at 2022 and 2023, they started selling. In 2022, the institutions sold $55 billion. There was more selling than buying. 2023, they again sold $78 billion. They didn't buy, they sold more. And of course, 2024, there was a sell-off just by institution, $241 billion. Of course, if you combine it with the rest, it becomes $350. So just by the institution, you can see that they are consecutively selling from previous 3 years, 2022, 2023, and 2024. But the aggression in their behavior is worrisome because They sold 55 billion, then they sold 78 billion. But this sell-off of 241 billion in dollar terms is worrisome because it shows that there is something that is bothering institutions. And that's why they are selling, right? Because if there was nothing to worry, they wouldn't do it. Now let's look at other years. Let's talk about the where the hell did it go? 1996, okay? So we talk about 1996, 97, 98, 99, 4 years, okay? In 96 and 97, there was buying, 2 years of buying. 98, 99, 98 was again buying, 99 was a selling. So they did buying of 30 billion in 96, 45 in 97, 25 in 98, and 90 billion sell-off, which we already talked about, in the year of 1999, which means that they didn't sell for 2 years. This was just the beginning. I think they needed a learning curve to become a bit more educated. They didn't sell off big, and they sold in 2000, I think they sold 200 billion. So in 1999, they sold 90 billion, and then they went aggressive. Anyway, I'm guessing that number 2000, I might be wrong. So let's look at 2004, 5, 6, and 7. So in 2004, they did buying of 50, 2005 buying of 60, 2006 they did a buying of 40, and in 2007 they sold 120. So basically they did 3 years of buying again in those years, and of course on the 4th year they sold 1 year before the financial crisis. This time I think they have learned their lesson. They did only 2 years of buying, which is 2020 and 2021, or maybe they did overbuying in 2020 because it was so obvious. I was in the stock market as well at that time. I was investing in weed related and EV related stocks. I made a ton of money on that NEO. It went from, for me, for $2 to $50. That was my exit. Now I think it's down, but it's still higher than where I bought. So I made a ton of money on that one. But it was really easy, very obvious, even from Bitcoin's perspective. Just Ethereum, I think how much did I buy? I'm Ethereum investor. I was an Ethereum investor from 2016, but in 2020 I bought, I think, around $35,000 or $30,000 of Ethereum, around 130 price. Anyway, just that bag went to $1 million in 2021, close to $1 million. It was 900 something. I sold it around 4,500 in April. Anyway, the overall thing is that in 2020 maybe they over-invested, and then what happened is that they didn't decide to invest in 2022. They started milking the cow maybe early on. So when we look at these 5 years, they invested in 2 years, 2020, 2021, and then from 2022, they are just selling. Now, the pattern, the behavior, everything is in line. And as I say, don't invent the wheel when the wheel is already there. You already have institutions who have access to more information. They're richer than you, they're smarter than you. If they are not deciding to sit in the market and you are deciding to sit in the market, that's pretty much on you. Anyway, now let's conclude. We have already seen 2 very obvious indications. One is the economical. It's the economic indication is called stagflation. You can go and study about it. Second is the indicator of my own, which is not available on internet, where you take the year before financial crisis, you take the sell-off of smart money, you take that dollar value and you divide it by the market cap, total market cap of stock, because they were selling stock, right? You take the total market cap of stock of US, because we are talking about US, and you get the percentage value. This is a solid indicator because it's not missing out, it's working just very accurately. I would have gone really in the past data, but digging into 90s or 80s, that was a bit difficult, so I didn't go and touched 1970 financial crisis or other crisis periods. I just touched the data that was more accurate and more easily available, so even you can go and check and you can see what happened in the past 24 or 25 years. Now, of course, as I said in the beginning that I'm not a god. I don't know anything. The only thing that I can come and share is that a warning, because we are in the green place. If you are worried and you think that you should be smart enough, maybe this is the place where you can take an exit, because the market is pumping, right? Bitcoin was sitting at $98,000. This is after reversing from 92, and some of the altcoins have started pumping 20-30% already. This is the time maybe to find an exit. If you also assume that we are going to see financial crisis, or maybe wait for 15th of Jan and see that the inflation didn't change, or it didn't reduce much, or it increased even after 3 rate cuts, then that should indicate that, okay, we are dealing with stagflation. And of course, we already have my indicator. I don't know what to name it. I'll name it somewhere later. You can use that indicator to also conclude that, okay, you're going to deal with something aggressive. Of course, if you look at the ETFs of Bitcoin, they have started selling as well. BlackRock, that wasn't selling anything, they have sold 300 million once, 200 million another. I think they have sold close to $500 million up till now, and they were not doing any of that. If you look at the total sell-off up till now, as at the time of making of this video, what date it is, 3rd of Jan, we have seen a sell-off by ETF of Bitcoin that is around 1.95. Now I don't have a total value of ETF, but you can take that total sell-off. Let's do that actually. Just a second. What is the total ETF value in dollar of Bitcoin? Just a second, sorry. Okay, it will tell us what that is, total value, and I'll tell it to you. So what we will do is that we will take this 1.95 billion and we will divide it by the total market cap of the ETF of Bitcoin, and we will see what kind of percentage we get, because we have already seen that the indicator is 0.61. Of course, by the way, I forgot to tell you that the financial crisis indicator is 1%. It's a 1.1%. To be very exact, it's a 1.14%, which means that in the year of 2025, we are going to see a sell-off of 1.15%, which basically means that the sell-off of the stock market will be higher than 350 billion. It will be above 400 billion as well. That will be really, really fun. Let me tell you what is the total. It's giving me an overall divided value. What the hell? Okay, 53 billion from them. Okay, total 104 billion. This is not going to be nice. I can already see the percentage. 1.95 divided by 104. It's 1.87%. This is not nice. If we follow the logic of stock market, this is already above the financial crisis indicator, which again is my own indicator. It's at 1.14%. But if you look at the stock market values, they consider 0.61 as an indicator, and this one is way, way higher. It's 3 times that value. So I think this is a red flag as well. Considering the standards of the stock market, we have to assume that this is not nice either. I think this is pretty much it that I wanted to share. Now the rest is, of course, up to you. The pattern that you will notice in the market would be that the first quarter would seem green. Of course, when the summer starts, it will go red. You would think that the prices are discounted because the last quarter will go green, but it will not. It will be a pattern like this. This is where you start. It will be green. In summer, it goes red. You will buy thinking it is going to go up, only to find out it is going to go further red. You would assume that's not going to happen. Go and check 2019 and see what happened to Bitcoin. Those who bought in summer, They were only crying in the month of December and November because things didn't change. And of course, people who were smart enough, they looked at it, they realized that 2020 is not going to be nice. But anyway, that's pretty much it. There's nothing else for me to look at. It's not a nice video to make. I am going to receive a lot of hate for it because they are going to continuously come and share this with me. I think in the month of March, they will say that you announced it. But this is a premature video for those who want to take action, so they could prepare in advance. And I can be wrong, but these are based on numbers and stats. And the numbers and stats, generally, they don't lie. If I go wrong, that's fine. At least personally, I'm not going to go for long haul in the market. I will trade, but I'm not going to invest and stay married to any coin in 2025 until and unless I see a clear-cut reversal in the economy, where I see that Trump or someone else comes and they have some kind of magic stick that can reverse the overall situation. I'm not going to assume anything. Even if you look at the trade deficits in the last quarter, they were 109 billion compared to 90-something billion in the month of November. I think they have increased, which basically means the number of imports are increasing than exports. That's a bad sign for the economy. But these are very small things. And when I looked at the Trump's plan of 2025, they're small adjustments. They cannot fix things. You need to understand that if a rate cut cannot fix something, it means that the economic problems are way deeper. And those who are the policymakers, even they are not able to pinpoint what to do. And when situations like this happen, I always say that the mother finance is asking for sacrifice. And sacrifice is the public at large, which are the retail investors who takes line of credits and they go and invest in crypto. They take loans and they sell their homes and they do everything stupid out there by buying into FOMO. And when the economy goes bad, at the first brink of it, when they're not able to make payments, it's like house of cards. Everything starts collapsing. At that time, they start thinking they need to feed their family, their kids, their wife, they have to pay mortgage, and then they start taking losses of 40%, 50%, and that is what starts the overall crash. But your smart money has already left. They're not worried about it at all. And if then they start participating in it, then it starts fucking everything up. And that is what is called the year of the biggest sell-off. In simple language, it's called financial crisis. So that is the year 2008, 2000, and 2025 maybe. Anyway, it's 34 minutes video. I'm so sorry for that. But it's just that I wanted to share everything so you can do your own math and you understand what to do with it and maybe try to be safe. Thank you for watching the video. If you have any questions or I have touched on a topic and you expect me to explain a bit more, I'll try my best to explain that to you in the comments. Leave a comment, and I'm not going to tell you to like and subscribe, because if you're not interacting with the video or if you're not subscribed, you're not going to see all the 10 videos that I make every day. You're going to miss out on it, and I think you are educated enough to understand what to subscribe and what not to, because if you want to miss out on it, then why not? It's for your own good, and you should know better what is good for you.